Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. We're actually looking at some monstrous gains that we had yesterday in our portfolios. Probably our best day of the year. Average gain of about 60%. Believe it or not, for these key portfolios. We'll get to that in a second. But right now we're looking at, let's see, chart of the market. This is... what is this? This is our US Day Trader 1.0. As you can see, it's in a short position today. Look at that beautiful long setup that it had yesterday on the meteoric rise in the market. Just a beautiful thing to see was the market yesterday. As you can see, we had some nice winners the 2 days prior to that. On the 2nd last week, and of course the 6th and the 7th, two shorts, two very nice short setups. But what was interesting is we had this swing point high right here last Friday, and then on Tuesday we had the gap. As you know, we bounced off of that swing point high around 1030. We'll call it in the S&P. The bulls tried to make a run of it, but it really just wasn't to be, and we'll look at why in a second. And just simply ended up being a beautiful fade of this move right here, this extension of the gap. Erroneous extension of the gap, and just a beautiful move to the downside. As you can see, US Day Trader 1.0 held the short position beautifully and covered right before a little bit lower, but finished a little bit higher than the cover. But yesterday was just beautiful. Gave up a little bit on the trailing stop right there. But what was interesting is you could see this. Not only did we have the very key swing point high right there. We had the test right there. We had the break right there. As you can see, the selling really began to accelerate once we had this lower shoulder right here, this pretty ugly head and shoulders formation, but definitely a bull flag reversal, and just went right down to it. But it was this really key area around 10:30. So we knew yesterday on the 7th, today's the 8th day of July. 2010. We're looking at Thursday, but we knew on Wednesday if we just could break above this 1030 level, that would be a break above the key 50 to 618 Fibonacci retracement band that we always use, and it happened to be in confluence with the aforementioned swing point high right here and swing point low right there. Once we did break above that, boy, it was just off to the races for this long setup, and literally like almost every one of our systems were long yesterday and participated nicely. The Matt Black $100,000 portfolio, one of our most diversified portfolios, actually the most diversified, made $44,000 yesterday, and it was long. We'll look at that in a second. It was long all the way throughout here around 25, well, around 27, 30, 35, 40, 45. I mean, it just kept getting long and long and long. Today we're in a short setup, but right now we're going to look at the dynamics of the market. Look at the, let's go ahead and minimize this. There we go. So there's the dynamics. Why did we, actually we're going to scroll out just a little bit. And here we see that gap fade. Well, as you can see, we had that huge gap up on Tuesday, following the holiday weekend, and the extension move. But look what's actually going on. Of course, we have red bars, but we had bearishness here, bearishness here, bearishness here, a little bit of bullishness there, but bearishness here. So we have had an overwhelming bullish bias, suggesting that not only a divergence, but actual bearishness, that the move, the gap higher above the prior day's highs, which was last Friday, was simply not going to be sustainable. So that's why it was such a beautiful opportunity to fade that move on the bearish side. But lo and behold, on Wednesday, what do we have? Well, we have the opposite. We have a nice concerted effort amongst the bulls. No emotional buying on the open, but a nice conservative. And what do we have? All bullishness. All bullish, accelerating bullishness, bullishness, overwhelming bullishness above the trend. So once we got above the high of the prior day right there, you see we tested it, came back to around the trend, and just accelerated just in a beautiful move reminiscent of the old days in the market. Certainly the money coming back into stocks. On our official market timing basis, we're still going to hold to bearish, because for our intents and purposes, we've really seen nothing other than extension and a snapback, a mean reversion, to suggest that the market is likely to move higher from here. And certainly going into the fall, we're going to likely get a double dip in the market, so it should present some great buying opportunities, but great opportunities as of late to add to your 401ks over the recent selling. Right around here, we'll call it in 1,000 level, very around 1,000 level in the ES. But right now, bouncing off the trend a little bit, really just a quiet session, kind of digesting the monstrous gains that we did have yesterday. So that's kind of what, this is a grind ES, that's kind of what we had yesterday, just a lot of buying early in the early session and holding throughout the course of the day. But we're going to go ahead and switch over and look at, let's see okay, so we'll look at the daily chart. Kind of interesting. We're holding on to our what was roughly about an hour ago about 100 points in profit, $5,000 on our official market timing bearishness. Still, even with the snapback, which simply was, as you can see, a move back just above the high of the 10-day, or just above the 10-day moving average, which is our short-term measure of trend following significance. We are seeing a little bit of erosion in our directional movement and momentum indications, and we especially see this beautiful divergence, a positive divergence, new low in price, but certainly not a new low in terms of momentum. Definitely reason and cause for a snapback off of 1020 and reclamation of the 1040 level, which we've often mentioned is a key level, 1040 and 1080. But as you can see, going to 1120, quick 100 points down to 1020, nice even 100 points, we get the bounce. So we are remaining officially bearish, and if we get above 1100, we'll start to move to bullish. Having said that, should we get some continued strength and underpinnings, underlying indications of bullish strength, we may go ahead and switch out to neutral and book our 100 points in S&P profits. And of course, you can auto trade these recommendations, our official market timing signals, with instant access, and you can trade as many contracts as you like. Actually, just $1,000 a year, $9.99 a year. So we're going to go over and look over at our portfolios we were just looking at. Wow, was it a banner day, another banner day for the MiniAnalyst.com. Certainly the best day of the year. $44,000 was the gain for the black portfolio, the matte black portfolio. $44,000. There you see it right there. $44,000 for the very diversified trades, 4 contracts in the mini S&P futures, stock index futures, and there you can see it just bought, kept buying throughout the day on the ES. Bought a couple of times in the mid cap, sold at the end of the session, bought 3 times in the mini Russell contract, and on the mini Dow, as you can see, just gains everywhere. $12,000 in gains, $15,000 in gains in the ES. 3 buys, looks like. I can't really see that. Maybe 2 or 3 buys. Yeah, 3 buys and a sell. Just trailing out of those. Just a beautiful day. $44,000. For those of our clients, again, congratulations for upgrading goes to you to putting money to work after the drawdown. We mentioned the key drawdown that we had recently seen. We've given it up at about 50 to 61% of our profits. Great opportunity to jump in head first and look what you're rewarded with. Huge gains, particularly in our MAP DT version 4.0 clients. Actually, the leader was the Triple Threat Trader HR with 74%. I'm sorry, actually the MAP DT original, 78% was the gain yesterday. $15,000 on a $20,000 portfolio. TTTHR gained almost 75%. 64% was the gain for the MAP DT version 4.0 HR, aforementioned. $16,000 on a $25,000 account. The MSAU, actually, the ultimate portfolio, up $4,500 on a $15,000 account. So we're thinking, wait a second, this didn't really hold pace. We had a 42% average return for all of our primary futures portfolios. What do we need to do here? Well, we went ahead and dropped the singular swing model in the MSAU. So now this is just a purely day trade model, and now it's a $10,000 account, not $15,000. So the 44.75 is actually a 45% return for that portfolio. We just saw that. There's the MAP DT up 15,000, 4.0 HR up 15,000. So here's the MSAU Ultimate with $4,500 in gains. There's all the gains for the day, as you can see. Beautiful gains. But now the MSAU DT, 10,000, up 45% in concert with everyone else. If you have any questions, you can just actually go to the website and click on Ultimate MSA Portfolios. There's the DTF. The compounded version is 3,000 every 3 months, and you can certainly compound your gains with that portfolio. But just go ahead and click on MSA Portfolios, or on all of our other portfolios, still, you could buy 2 quarters, you get 2 free, that's a whole year, and the broker pays you back the cost of your commission, or enter promo code VIDEO on any purchase other than the MSA portfolios and save an extra 20%, just promo code VIDEO. We don't really have time to go through that, but you can look at our MSA portfolios right there, and here's the MSA Ultimate DT and Ultimate DTF, fixed fractional compounding. So we hope you enjoyed this update, and we'll see you next time.